Hi, I'm Bill Purpura, William Purpura. I'm a member of the Commodity Exchange here in New York on the COMEX Governors Committee, and also run a company called GLT Gold LLC, where we deal in gold. I've been trading the gold market and the commodity markets for over 40 years. And very, very interesting things happening now with the tariffs and whatnot. So there's some really, really interesting price movements where the commodity markets are kind of giving you a clue about what has happened and the effects that tariffs and other policies have had, the wars and things like that on the commodities, particularly copper, gold, and oil. I think those are the three most prominent markets right now that are being affected by everything that's going on globally. One of the things that we're seeing are in the energy markets are huge type of demand, electricity demand. We just got our electric bills in the Northeast. I live in Pennsylvania, and we just got it. And because of a lot of the AI things that are going on, particularly in Virginia, our electric bills, because of the air conditioning, was really super high. So we really have to keep an eye on energies. And as far as gold goes, we've been advocating putting a portion of your portfolio into gold, maybe like 10%, to help smooth out the volatility and put a non-allocated asset class into your portfolio. So for instance, if we take a look at the copper market, when Trump announced that on that August 1st is the deadline, there's going to be a 50% tariff on copper. We saw the price of copper go into New York because what was happening, you see all of this copper coming into New York, into the U.S. warehouses, and it came from the global warehouses out of London. So these were from the London Metal Exchange warehouses. We saw prices go down there, and there's a big demand for copper in New York because they're trying to avoid the Russian tariffs. So that's just kind of one example of how the commodity markets are reflecting what's going on with policy.
Yes, hi. I'm here with William Purpura, ex-president of COMEX here, and you have just listened to him on the risk that we should watch out for the price fluctuation, especially in commodity, because of the trade war right now. Right now, I just wanted to pose a few more questions to pick his brain on investment portfolios for family offices. Let me start with a question that, because I know you had a deep experience in precious metal. So what would you tell us as investors?
As investors, would be different advice than as traders. Trading and investing are two different things. But as far as investing, which is what I'm more involved in now with gold as opposed to trading, I would say that consider gold an asset class, non-correlated asset class to traditional equities and real estate and fixed income. And consider putting a portion of your portfolio into precious metals.
What is your recommendation in terms of the percentage of allocating to this non-correlated asset class?
I think as a rule of thumb, I would recommend 10 to 15% in precious metals because gold has been performing very well and has really smoothed out portfolios and helped enhance returns. And historically, it's been a good store of value.
We are actually here at the trading floor of COMEX, and you can see, but however, for a lot of us that maybe the physical gold, just thinking about buying the gold is very nuanced, and it comes actually hand in hand with the storage and auditing as well. So Bill, could you tell us more about that?
Sure. When I talk we have a precious metals dealership called GLT Gold, and we have an online presence, but a lot of the product I do is I advise people, and we figure out the best way for them to approach the market. There are also precious metals IRAs that are very, very popular now, and one of the things we try to do is be very cautious about and very discriminate about the product that we put in, because some of the products have very, very high premiums, and you'll see a lot of dealers out there that will put very, very high markups on some of the things. We try to get it as close as we can, and so that to the spot price as we can and recommend that. We can also, we can do anything from a gram of gold to kilobars of gold. So depending on the investor's appetite and their preferences, getting the bullion value of the gold in there, I think, is the most important thing from an investment point of view. You don't want to pay a huge premium and then, pay a 10% premium and then have to make 13 or 14% to break even. We try to show them how their break-even point is more manageable, and so that it's more beneficial to their portfolio overall. We could recommend, like, if you wanted to get into coins, you might want to look at, say, like the Australian coins, because the premiums on those are a little bit more. It's the same. It's gold. It's all gold.
It's all gold.
And the American coins might be a little more expensive. So we look for the best premium and the best bang for the buck to give the investor the best chance of success.
Thank you, William. And one last question is that does your services that extend to international clients, international family offices?
Well, we can. What I would suggest for that is that if there are any purchases, that they allow us to store them securely here in the United States, because depending on the quantity, the shipping overseas can be a little bit expensive, but it certainly can be managed. And to set up, we would be able to set up custody and in secured warehouses in the country. We have access to two here in the United States that are big, well-known, and also in Canada. And we also have storage in Dubai. So we have a warehouse that we use, a depository that we have an account at in Dubai.
Great. Thank you for your time, William. Thank you.
Okay, pleasure. Thank you, Shirley.